So what's up, everybody, and welcome back, of course, to ZML's FX TV show. Okay, so don't forget that in this video, this is the first beginners class for trading forex. And if you're joining here for the first time, make sure that you already have a trading account and make sure you've already verified your trading account. And make sure the things that you should know is make sure you have verified your account and make sure you have learned how to link your account to MT4. And if you have not done that, you can check my WhatsApp in the description or WhatsApp me so that we move on the same lane, okay? So in today's video, you're gonna learn about something so much because most people ask what confuses so much traders are like if you look at these things here, these lines here, this is what confuses traders so much. And I'm gonna be using my laptop, but of course the same things are also in the phone. All the time I'll also use the Android version, okay? But the reason why I'm choosing this so that you can have a bigger view of the market and understand everything that I'm going to be showing you. So today the most important thing I'm going to be teaching you about is what we call candlesticks and of course the forex trend. Two most important things, and I make sure this video is going to be long, so make sure you have a pen with you and make sure you just record everything and make sure you understand everything, and leave a comment where you're watching from, and don't forget to subscribe to my channel, and don't forget of course to like the video, and of course turn on that notification bell so don't miss most of my videos if you want to be a full-time trader. So the fact that you need to realize is does forex trading pay? Now the question is like this: yes, forex trading pays, guys, and it takes all about knowledge, and that is why you need to focus whatever I'm teaching you. Make sure you focus because when you have the knowledge, that's when you'll start to earn. You understand that it's all about having the knowledge. So knowledge comes first before money. So guys, let's get started immediately without wasting your time. Now, I know most people who are joining into forex, what's confusing you is this bars that you're seeing. What does this bars mean? What do these bars mean? And this is a very important thing. I want you to realize, what does this bars mean? Now, when you look at this bus, you can feel the reason why I'm using red, and you can see I'm using this one like pale blue. You understand that? Can I say pale blue or something like that? I'm using red, then pale blue. These red ones that I'm using, let me first explain to you something. Let me first start with the trend, okay? I don't want to confuse things and mix things up. Let me first start with the trend. Now, when you talk about the Forex trend, in the Forex trend, we have two types of trends, okay? We have what you call the bullish trend, then we have what you call the bearish trend. A bullish trend is like when a bullish trend is when price is being pushed up, okay? Just like you can see in this point, there are points where price is moving up like this point. You understand that? That is that upward movement. So what does that mean? Let me show you a line chart so that it becomes easier for you to understand what a bullish trend means. A bullish trend is like this. You can see this. You can see this. This is a bullish trend. Why? Is price is moving up. The price is just moving up. We call it a bullish trend or the bias. It means the buyers are pushing price up. Okay. The reason why we call it the bullish trend is the bullish comes from the word bulls. When bulls are fighting, bulls tend to push their horns up. You understand that when they're fighting. So that's why we call it a bullish trend. Bullish trend means that they're trying to push price upward. So I'm using the line chart so you can be able to understand what I'm talking about. Then when we talk about the bearish trend means pushing price downwards, okay? Like the market is facing down. The river is flowing downwards. Then this one, the bullish trend, the river is flowing upwards, okay? Then the bearish trend means the river is flowing downwards, like you could see this arrow, okay? It's flowing downwards. Now, one thing you need to realize is when you talk about the trend, it's showing me the direction of the market. It's like it's showing you where you're going. That's why they say before you trade, make sure you know the trend of the market. So I've told you we have two types of trends. We have the bullish trend, which is this, and why they call it bullish is because the buyers are very strong in the market and are trying to push price upwards, okay? Then we have the bearish trend, which means the sellers are trying to push price downwards. So the bearish trend stands for sellers are more stronger than the buyers. So now when you see the bullish trend, it therefore means that the buyers are more stronger than the sellers. This is the bullish trend. What does that mean? The buyers are more stronger than the sellers. When you see a bearish trend, it means the sellers are more stronger than the buyers because the sellers are pushing the price downwards. You understand? So that's how the Forex market works. Now, let me tell you one simple thing. A Forex market works in a way that the buyers and the sellers are participating. It's just like when you go to the market. There's what you call demand and supply, and you'll come to realize all this. There are things that are pushing the price of a particular commodity up. At the same time, some things are pushing the price of that commodity down. You understand that? That's why the market of something is derived from very many things. You understand that? Just like maybe the demand and the supply. That's why we are going into candles. Okay. Now, this is just I was just showing you about the trend, the forex trend. Now let's go back to our candles, because these candles are very, very important. They mean a lot in the market, and you're going to understand in detail what the bulls are and what these candles are. So make sure you stay tuned. And remember one thing: the most important part in trading forex is understanding this point of bulls and this point of candles in the market. Okay, so we're gonna be able to name candles and everything like that. Now, the first thing is I want you to realize these candles. These candles represent buyers and sellers. That's rule number one. Okay, and every candle. That's why we have different colors, different colors, different colors, different colors. Okay. Now for here, you can use. You see this bullish. These are bullish. Let me first zoom it again before I show you something so that you don't get confused here. Let me kind of zoom in. So I was telling you about the bearish. You realize, let me first show you one thing, guys. I want you to realize one thing. You see, this is a bearish trend. Okay, because the river is flowing downwards. It is steep. You see, it is steep. It's a steep trend. When you see a steep trend, that's a bearish trend. So now you realize that there are so many reds. When I told you, when you see a bearish trend, it represents that the sellers are very strong. The sellers are pushing price downwards. And I'm using these red candles to represent sellers. That's why you see that red candles are dominating in the market, meaning the sellers are very strong. That's why whenever you see prices falling more, you only see red candles. Therefore means that the sellers are only taking part of that market. They're pushing price downwards. You see this? You see that the buyers are very little. So I'm using the red candle to represent sellers and this pale green candle to represent buyers. Okay, I hope you guys have understood. Now, if we go to bullish time frame again, the bullish what? The bullish trend. You see here that this is the bullish trend. The river is flowing upwards. I always love using a river so that you understand it very well. You can see the arrow, the direction of the market. So you realize that the buyers here are pushing the price up, and that's why you can see so many these pale green candles. I'm using them to represent the buyers. So let them not confuse you. These pale green ones are representing the buyers. That's why you can see that these pale green candles are dominating here more than the red candles. And you see even that these pale green ones are very big. It means the buyers are very strong in the market. Hope you've understood that, guys. Now let's go in detail of understanding every candle in the market. Every candle, every candle, every candle. Now, one thing you need to realize about the Forex market, guys, is the Forex market is pays, but all you need to do is you need to learn about the market. Okay. Now, since I've told you that let me first start with this one. Okay. I want us to start with this candle here. Now, let me tell you one thing. I told you one simple thing about candles. Now, when you look at this candle here, this candle here. Okay, sorry for that. This candle here, you see only this candle here. This is the body of the candle. The body of the candle starts from here. I hope you've understood that. The body of the candle. Only this pointer is the body of the candle. You get that? The whole body of the candle. This one represents the body of the candle. Then we have the tails. Tails are this. Tails are this. You see those ones? We call them tails. Tails or wicks. Tails or wicks. You understand that? Make sure you write down whatever I'm telling you. So this is the body of the candle. Then these are the tails. Now, whenever you see these tails represent opposition in the market. Opposition, a fight. Now, let me tell you one thing, guys. There's what you call time frames in Forex market. You can see that we have here 15 time frame, 30-minute time frame. So whenever you click on 30-minute time frame, it means every candle here right now we are using 1 hour time frame. 1 hour. It means this candle here, for it to be fully formed, it takes 1 hour for it to be fully formed. Then again, we can form another candle. But when this candle here is forming, there is a fight between the buyers and the sellers. Now, this is a bullish candle because I told you pale green represents bullish. Bullish means this is the opening price. The buyers open the price from down here. From here, I want you to concentrate on mainly this big candle here. Buyers open the price from down here, which is 0.6981. That's the opening price. Then the closing price for this bullish candle is here. Okay? So meaning the pressure coming from down is mainly for the buyers. Buyers are pushing price up. Then at the same time, sellers are also trying to push price down. So the question is like this: who wins the battle? Okay, when you see that the body of the buyer, the body of this bullish candle is bigger than this tail here, than this wick here. This wick here represents opposition from the sellers. Sellers are trying to push price down, but they were so minimal in the market. That's why you see that this tail is very small. When you see that this tail is very small, it therefore represents that sellers are very weak in the forex market. In that particular time, sellers are very weak. So this candle represents the bullish candle, okay? The buyers, okay? That's what I'm just trying to tell you. So what does the bullish candle mean? Opening price is below here, then this is the closing price of the bullish candle. That is what a bullish candle means. Then when you come to a bearish candle, a what? A bearish candle, which is the selling pressure, and I'm using this red candle to represent that, this red candle here. So it is now the opposite of the bullish candle. This one is the opening price. The sellers are opening price from here, then they close from here. Okay. So the sellers get opposition. The sellers get opposition from the buyers from here. Buyers trying to push price up. Now you see that it's a fight. Just sellers, the buyers are trying to push price up. The sellers are trying to push the price down. So whenever you see a candle forming, you see there is always a fight. At the end of the candle, you will tell that who are more stronger. So if you realize this candle here, the sellers were more stronger because there is a small opposition. This is the weak, a small opposition from the what? From the buyers. Okay. Then I want you to look at this type of candle here that you can see here. This one. This is a bullish candle. What does this bullish candle mean? Let me show you. Bullish candle, opening price and closing price. This is the opening price of the bullish candle. This is the closing price of the bullish candle. Okay. So you read that the body of this candle is small. Okay. And you said this tail is from the opposition, which are the sellers trying to push price down. So when this tail is almost the same size as the body, it means the buyers, the sellers are also coming into the market. You get that? Let me show you an example. I want you to look at this type of candle here. We're only looking at bullish candles now first. Bullish candles, this opening price of a bullish candle, that candle, we are looking at that candle, and this is the closing price of the bullish candle. Now, I told you one simple thing. This tail here that you see here represents opposition from the sellers. Sellers are trying to push price downwards, okay? Sorry for that. This tail here represents opposition. Just a moment, guys, sorry. This tail here represents opposition from the sellers trying to push price downwards. As bulls are the buyers are trying to push price upwards, then sellers are trying to push it downwards, okay? Now, if this tail here is almost the same length as that one of the body, it means they're almost equal. But you can see that the body of the candle is smaller than this tail. So meaning the sellers are very strong here. Why am I saying the sellers are very strong here? Because this opposition here is longer than the body. You get that? This opposition. Let me tell you one simple secret. When a candle is being formed, whenever you see where this wick has reached here, this where the wick has reached, it means the price had reached there. Let me tell you a very simple example. I want you to understand this very well. It's like you going to the market and you're going to bargain. Okay? Your bargaining power will depend on your closing price. Is your closing price. Because let's say you're going to buy some shoes and the owner of the selling the shoe says that, okay, you know what? The thing is $15. Okay? So that was the price that was suggested by the seller. Okay, by the seller. Okay, the price was said $15, but because of your bargaining power, you had to squeeze the price down to $12. That's why we have opening price and the closing price. The seller has suggested his price that yes, I want which is this price. Yes, I want $20. But for you squeeze price, let's say this was $20 price. This is the $20 price, okay? Because remember these things at this side here, whenever you see these figures, this ones represent figure, this ones represent price. So this point here that you see here, let me show you something. Here that you see here, at the tip of this wick, price had reached there, okay? But the buyers couldn't hold the price to this point. That's why the sellers pushed it down and they closed near the opening price. You see that the opening price and the closing price is very near. So the sellers were very strong here. Hope you understood that, guys. As simple as that. Now, let me go back to our last candle. Let me go to the last candle. Then after the last bullish candle, then we go to the bearish candle. This thing, all you need to do is you need to practice, and after doing this, make sure you send me enough examples so I can be able to mark you, of course, for free. Okay, whether you're doing the correct thing, so meaning you can determine the strengths of the market out of only this. You can only use this to determine the strengths of the market. Now, I want us to look at this big bullish candle here, the buying candle, this big bullish candle here. So let's draw the opening and closing price of this candle. That is the opening of the candle, opening price. So this points represents the price, okay? 0.6979, that's the opening price. Then the closing price of this candle is that point, 0.7031, okay? Now you notice that this is the body of the candle. Then this rejection that you see here is from the sellers, but the rejection is so minimal, meaning the sellers they were trying to push price down, but they're so weak. That's why you see that the opening price is far away from the closing price, and the body of the candle is longer than the wick. So what does this mean? It means the buyers are very strong in this market. It means the buyers are very strong in this market. This represents the buyers being stronger in the market. The body of the candle and the length of the wick or the tail, you can be able to know who is stronger in the market. I hope you've understood that, guys. You can be able to know who is stronger in the market. Let me look for one bullish candle so you understand very well. Now, you see this bullish candle here. Let me show you this bullish candle here. This one here. So the question is when, after that, you'll also, let me just try to show you something small about when to sell and when to buy. So meaning if you want to buy something, you first have to establish whether buyers are very strong before trying to buy something, okay? Let me give you an example. Look at this candle here. Bullish candle, that's the opening price, and this is the closing price. If you look at that candle, you realize that this is the body of the candle, and this is just a very small tail or the weak rejection from the sellers. So you realize that the buyers are very strong. The buying pressure is very strong. So if you see that the buying pressure is very strong, meaning the momentum of the buyers is very high. That's why you could see the price, you could see the buyers kept on pushing price up. The buyers kept on pushing price up because this candle here is showing you that the momentum of buyers is very high. You cannot again see this type of candle and start selling. You understand that? This candle is showing you that, okay, you know what? The buyers are very strong in the market. So at least you're only going to be looking for buying opportunities. And that's when you with the time you'll come to realize when to buy and when. It's just a way of speculating the market. You know what? The buyers are very strong. Hope you've understood that, guys. Now, what we are going into is we are going into the bearish candle, which is the red candle. Red candle representing the what? It represents the sellers. And I told you it represents the sellers price trying to be pushed down, okay? So let's come here. Let me show an example here. Let me read I want you to read this very well. Let's read this together. There's something so special about this point here. Here, this is where I'm going to start my work from. Okay, I'm going to start my work from here. I'm going to start with the first bullish candle. I'm going to start with this bullish candle. This is the opening price of the bullish candle and closing price of that bullish candle. Now, you realize this candle is very funny, okay? This candle here, the body of this candle is very small, but the tail here is very long, and this tail comes from opposition. And when you see that the tail is longer than the body, it means the sellers are more stronger because there is a big rejection, okay? And I told you about the price, the buyers had pushed price up to here. But because sellers were very strong, they had to push it back so that the buyers could close the price next to the opening price. That's why the body of the candle the length of the body of the candle is smaller than the length of the overall wick. So what does that mean? It means the sellers are dominating in the market. After that, what happened? You saw the sellers. You see this bearish candle. Sellers are already in the market. So after seeing this, you should not even go and stay. It's just like trying to tell you that, you know what? We, the buyers, are now weak in the market. The sellers are now in the market. So at least start looking for selling pressure. You understand? For selling opportunities. That's why you see after this, we had a nice, strong, bearish candle, okay, representing the sellers only dominating in the market. Now, let's keep moving on. Now we are going to the bearish candle. The bearish candle is the opposite of the bullish candle. The bearish candle, this is the opening price because they're trying to push price down, not like the buyers trying to push price up. That's the opening price, and this is the closing price. That's the closing price. So for them, they get rejections from down. The buyers are trying to reject them, but you can see the body, the length of the body of this candle is bigger than this wick. This tail is very small. What does that represent? It represents that the sellers are very strong in the market. You said the sellers dominated in the market completely because of this small rejection from the buyers. Okay, then see the next candle. The next candle is still bearish, represent that the sellers are still strong, and the body of the candle is still bigger than this wick here. And it kept on dropping like that, kept on dropping like that, dropping like that. The sellers are still strong. Sellers are still very strong. You could see that sellers were still very strong. Hope you guys have understood me. The sellers were still very strong. So the body of the body and the body of the candle and the length of the wick can be able to identify you that whether the buyers or sellers are strong, and you can be able to know the next move of the market by just only looking at the candles. Now, what do you learn from this lesson? What do you learn from this lesson? You realize that candles are very important, and we call these candlesticks. Okay, candlesticks. Okay, some people call it the anyway. We call these candlesticks. So this is a very important topic that we should never miss as a forex trader, because you get to know the momentum and what is happening in the market. So after every candle, you know that okay, the buyers were strong in this time, the sellers were strong in this time. And I told you one thing, that you see these things here. These ones here. Okay, these ones are time frames. Even if you're using an Android phone, you will see this, and I'll be making also another video of Android. This one represents 1 minute. What this okay, like when I click on this 1 minute, it therefore means that every candle represents 1 minute. It means every candle is formed after 1 minute. It means the buyers and the sellers are fighting only for 1 minute, and that candle is fully formed. Okay, you get that. And if I say that I'm going to be using just a moment, you see candles. These are candles. I think my price is okay. If you come to even 5 minutes, if you come to 5 minutes, it means every candle that you're gonna be seeing here represents 5 minutes. You get that, guys? It means every candle here represents 5 minutes. Every candle here represents 5 minutes. Okay. Then if again you come and click on 15 minutes, it means every candle is formed after 15 minutes. Every candle is formed after 15 minutes. I hope you have understood that. Every candle is formed after 15 minutes. If you come to 30 minutes time frame, it means every candle represents 30 minutes. Every candle is formed after 30 minutes. It means the buyers and sellers will be fighting only for 30 minutes, and the candle is fully formed. Okay? So what you need to know is every candle here, like now you can see a candle with a very strong tail like that. Every candle represents its own time frame. Okay, depending on the time frame that you're analyzing the market with. The people who use high time frames to analyze the market, those are long-term traders, and we also have short-term traders who use small time frames like H1, H4, 45 minutes, 30 minutes to analyze the forex market. So in this lesson, guys, I just want to make sure I think you have learned something. And in our next lesson, what we shall be looking for is, let me hope you've learned candlesticks, you've learned something about candles, and you will be able to become a pro in trading. Then the next lesson is I'm going to be showing you about specific candles. There's specific candles like an engulfing candle, all those things. And if you're free, of course, I want you to go and research on that. I want you to go and research on engulfing candle, harami candle, railway track. Go and research on all types of candles. You'll be able to. Then, of course, by next week, I want to make sure that you can be able to at least place an order in a trade. Of course, set your stop loss, set your take profit, and of course understand risk management very well. That's what we are going to be only learning this week. So if you're watching this video, please drop that like and drop that comment. What do you think about this video? If you feel it was helpful, please don't forget to just share the video to anyone who wants to learn. I wish you all the best, guys. Thank you so much for being part of this live class. See you next time. Again, I'm going to be ending this live class. Thank you so much.